Folks, my name is Roger Scott, and I'm the Senior Strategist for 𝗧𝗴𝗀. Welcome to our midweek update roundtable. With me is my usual co-host, Zananiri. We are the two troublemakers. Jeff is from Joy of the Trade, and I'm the Senior Strategist for 𝗧𝗴𝗀. He's the Senior Strategist for Joy of the Trade. Welcome. Jeff, how are you today?
Excellent. How are you, Roger?
I'm doing great. It's a Wednesday today. It's a hump day.
Hump day. Short week next week. Big weekend this weekend. Memorial Day.
Yeah, a lot of people at the stores getting ready for the big barbecues. A lot of consumers. Obviously, there's no inflation in sight,
except for chicken. 6% in a year. Chicken is like the price of filet mignon now. Just getting some like chicken breast.
Is it?
It's wild. I do like I do the grocery shopping because I like to cook a lot. So I like to like the ingredients and stuff. And, being a trader and being like price conscious, I'm always just like, what's going on here? And being like just a little bit cheap. I'm kind of a cheap guy. It's kind of common in trading. I wouldn't say cheap. I like to spend money on quality.
Yeah.
I'm frugal. I'm like deal conscious.
Sure. That's okay. Nothing wrong with that.
I thought the supermarket was just ripping me off, but then I realized like, no, everything, like this is everything.
Yeah. Used. I was talking to somebody the other day about used car prices. It's just insane. It's crazy. They
don't have cars. You can't even rent a car. If you fly into Miami right now and go to, MIA International Airport and try to rent a car from Hertz, they don't have a car for you.
Really? It's that bad.
Yeah.
It's a mess. It's a mess. And at the same time, you look at consumer confidence yesterday, and you look at the home builders. It looks like things are slowing down. And you saw interest rates. You saw bond market rally. It's like, interest rates are not going higher. A little bit of relief for a few days, but it's a very interesting dynamic right now. It's almost counterintuitive. It's almost like, investors usually want the economy to heat up, but right now investors are completely against the economy. It's a very counterintuitive bubble we live in right now.
It's inverted. Like people don't want to see like super strong signs, but on the other hand, there's kind of like, if you think of it kind of like a straddle, like an option straddle, there is a floor to that. Okay. There's like a Goldilocks range. And if it's like too weak a number, then people are like, oh shit, like this is doing real damage. Like what happened to the jobs number, for instance, where they missed by 800,000 jobs. That was a bad day in stock market. People were like, wait, this is so terrible. Like maybe all the, these programs and people that's bad for the economy. So there's it's kind of like a dance where we have to balance it, I think.
And that's what you just said right there in the end. It's exactly that. It's exactly what it is. It's like everybody kind of knows what's right and wrong, but we're kind of all hoping like we want some bad news. We want chicken prices to go back down,
So it's like, it's the same thing with investing, right? Like everyone is kind of like in trading, people are like, oh, I love these stocks. I love this market. I'm long this market. You have to be long this market. You can't fight the Fed. We all know this. Like, this is obvious, right? But we all have like one foot out the door, kind of like a little bit, kind of like,
right.
Dabbling a little bit in, short side stuff, some volatility stuff, just to like constantly like just hedging our tail risk, because there's a bit of skepticism about this whole kind of house of cards game they're playing a little bit.
Well, I mean, look, on a fundamental basis, PE ratios are getting a little bit higher than normal. And I mean, that is significant. Although I totally get it based on what we've just discussed and the inflationary pressure and the economic environment and what we're coming out of that a lot of people want to forget. It's going to take a little while. I mean, this was the worst economic turndown since the Great Depression and World War II. And I was just talking yesterday. My wife, she doesn't practice law, but she went to law school 20 years ago, and two of her friends came to visit us yesterday. One is a federal judge now.
Wow.
Yeah. And one is a senior attorney for Walmart. And we were talking yesterday about about the economy and about the conditions. And they were just saying like things are just totally out of whack right now. Everywhere. Everywhere you look, things are just completely out of whack. And it's not gonna be 2 days to come out of this. It's not like we just had a little rain. This is a major I mean, the fact that we came out of this without a real crash is just,
I almost feel like the solution is going to be worse for the economy than the actual shutdowns were, in a way. Like these dislocations and this disruption is going to be bad for people, for the economy, for GDP growth, for the job market. And, it's hard to say how much quantitative easing is the appropriate amount and how much isn't the appropriate amount. But I like to use this analogy. Like if you're going to have 2 or 3 beers on a boat in the sun, that's probably the limit. You should have maybe 2 maximum in the sun, and like lights, like Coors Light, low alcohol and dehydrating. And that's probably the limit. But if you do that and then you get off the boat and then you do like 3 or 4 shots of tequila at the dock, you definitely should not get into your car. And I kind of feel like we're in the tequila shots phase of quantitative easing. Like this market's on fire. This stuff's, the inflation is exploding. GDP is like north of 5%. People are going back to work that want to work. They have biggest job openings in the history of the United States right now.
Oh, yeah. Yeah. Job signs everywhere around here. Everywhere.
Do we really need $120 billion a month from the Fed? And I'm not even talking about what the federal government is doing in terms of fiscal policy. I'm talking about monetary policy.
Right.
And so like the combination of all those things, it kind of seems like this is creating a whole new dislocation and problem down the line. But we're not economists. Let's think about stocks here for a minute.
Yeah.
Can I ask you a question about the stock market?
Yeah, please. I love it. Go ahead.
So we've seen I'm not really a commodities trader, but they're reference points. We call them reference points in our world, right? And we've seen severe drawdowns in iron ore. We saw a bit of a sell-off in copper. Corn was down 5.5% yesterday, right? And so you're starting to see Alcoa is a U.S. steel stock, was down 10% before today. I don't know what it's going to open today. We're recording this in the morning, but a lot of these other materials, commodity stocks are still pretty firm. They're still pretty big. They may be down like 1%, 2%, where the underlying commodities are down 5 to 10%. Do you think that it's going to translate into the stocks, or do you think the stocks are going to follow the stock market more?
No, I think the stocks are going to fall more into the stock market. And generally speaking, the underlying commodities always tend to, historically speaking, every time I've tested this several times, they tend to overreact quite a lot more than the actual company for various reasons. One specific one is they're not as they don't have the exact correlation. But yeah, they tend to react less. And I'm still very bullish on on all of these assets. I'm looking at this as a buying opportunity.
Yeah,
so I'm not turning bearish at all. I'm actually becoming increasingly bullish in non-precious metals, in chlorine. We talked about this my pool guy asked me. My pool guy asked me for a raise too last week. I didn't even know he did. He asked my wife. So yeah, so it's because my wife deals with all that stuff. I'm just not around as much.
Those guys are squeezed, man.
They're talking about things picking up even further in the summer. So I think, to answer your question, I see a lot less volatility in the stock market versus the actual underlying commodity.
Yeah.
And with that said, I still see more upside. I think
the commodity is a blip. I think the commodity is going to continue to go crazy, and the Fed's going to still have a problem on their hands. Personally,
there are huge shortages right now. There are huge supply chain issues, and also keep something else in mind. And we kind of touched on this a few minutes back. The world really was not prepared or anticipating this global meltdown last year. Our supply chain went from being five. I did an interesting report on this a few days ago, actually. Our supply chain, for those of you who don't know this or are not interested in this or may not have ever been curious about this, something you should think about right now. Our supply chain for most goods, not services, was 4 layers deep, 4 to 5 layers deep. It's right now 1 layer deep at the most.
So by layer, you mean like times the demand, or like
what I mean is let's say that I make beer, okay?
Yeah.
And let's say I get my hops from one company, and let's say that if that company doesn't have enough, I can go down to 3 or 4 other companies and get.
I got you.
The supply, the actual depth of the supply.
Source, yeah, the
source, the supply chain. Right. Yes, this the actual sourcing. Right. Right now, if you were to poll people in the consumer staple industry, they would tell you that the supply chain is only one level deep right now. That worries me quite a bit. I mean, doesn't it concern you?
Yeah. I mean, what makes me super nervous is that we've had like, this is one thing people don't really talk about. And this is something I'm really exploring further. We've had a complete breakdown of the international supply chain, much less like domestic. One of the reasons that there's, chicken wing shortages is that processing chicken wings is the most absurd thing in the world. Like, you grow the chickens in the United States and then you ship them to China because it's cheaper to have a Chinese person chop off the chicken wing, and then you package it back and ship it back to the United States. That whole process is broken down right now. And so we're seeing all kinds of bizarre logistics issues with the international processes from one place to the next.
Which you were talking about right now. Sorry, I don't mean to interrupt you, but I just want to add to this. The specific issue that you were talking about right now was the issue that I brought up last week in the session that I have with Tony Saliba. And when I told him this, Tony literally fell off his chair. He's like, chicken wing shortages? No, it's a big thing. There's headlines everywhere with chicken.
But think about it. Like, why can't they just chop up the chicken wings in Arkansas where the chickens are coming from, or wherever, I mean, it just doesn't make, I know there's an economic reason for it, but I think the economics are inverting. And I think the disruptive factor, the disruptive delta, to use a finance word, is starting to increase. So I think companies are starting to look at this like cost risk as something that's not worth it, if that makes any sense.
Well, there's two things. I want to read something to you, okay? Because this is right on our dot. And Tyson Foods is a stock that I recommended last week as a result. It's the largest processor of chicken, beef, pork, second largest food company in the Fortune 500. Yep. Listen to check this out. I'm going to read this to you because you don't even know how right you are. So this is David Gibbs. Do you have any idea who he is?
No, I don't.
I would not expect you would. He is the CEO of Yum Brands, KFC's parent company.
Yeah.
Listen to this. This is last week. Demand for new sandwiches has been so strong that, coupled with the general tightening in domestic chicken supply, our main challenge has been keeping up with that demand. I'm quoting the CEO of Yum Brands, who happens to own KFC. So if you're not right on the dot, Jeff, I don't know what else to say. And folks, for those of you interested, Tyson Foods, TSN ticker symbol, I have a price target of $90 per share over the next quarter. I just wanted to bring it up because you're so on the dot.
So think about this, Roger. So, and I say this all the time, and people say, oh, you're so political, but I'm not when I'm saying this. It's reality. If you look at the lower economic tiers in the US in particular, those people tend to eat more fast food. They tend to shop for groceries less. And so what's happened is the grocery store experience has become prohibitively cost expensive for the average American. So more and more Americans are descending into that bucket of people that are eating like Kentucky Fried Chicken sandwiches 3 nights a week for dinner to feed their families to get nutrition.
That's
not a terrible thing.
But you were so right. You were so right.
There's so many domino effects that spill over out of that, like healthcare, like insurance costs rising, like obesity problem. And I'm not trying to sit here and be like holier than thou or better, but I'm bullish on the stocks for that reason, because I think that these are part of the dislocations that are going to explode and continue to explode.
How about, let me ask you about one more. And see, it's interesting. The things that you're touching on right now, and folks at home, Jeff and I have not spoken about this topic at all. This is the first time we're talking about it. And you are hitting exactly the same topics that I've been talking about 3-4 days ago in my reports. So how about this? You said people are, remember you mentioned the unemployment situation?
Yeah.
You mentioned 800,000 people not job. Okay. How about this?
Oh, yeah.
Somebody's going to have to step in. So there's a staffing company called it's called TrueBlue. They connected 500,000 people in 2020 for low paying jobs like fast food workers. Ticker symbol TBI. I just want you to know that Well, because you're bringing up all these things that like I am totally on. We're very
put that one in my phone.
We're like, yeah. TBI and Tyson's Foods. Well, you're bringing up issues that are completely on my mind right now, and I'm writing them and I'm telling people about them, and you're bringing up extremely valid, timely points.
I don't know how you can fight these. Like as long as the mechanisms that are creating these dislocations are in place, you can't fight these trends. They're only going to get crazier.
Right.
It's like housing. We talked about housing, right? And so people were asking me like 4 months ago about Miami real estate that were on the fence and that were living here. You know, I have some friends that came down from New York. I have some friends from California that were testing the area out. And they were like, oh, this is so nuts. Do you think it's going to calm down so I can get in? I'm like, no, this is going to accelerate. And lo and behold, you know, after a 50% increase 6 months ago, now we've had another 30%. So it's doubled in a year. And we're having people bidding hundreds of thousands of dollars above asking price in bidding wars.
Yeah.
In bidding wars. Open houses, 25 people showing up.
We don't even have listings. We don't even have listings anymore. The only things that get sold is pocket listings because they can't list them fast enough. It's craziness. It's craziness. Do you think it's do you think it's going to continue? Do you think we're going to see more of a melt up in the housing market?
We have the smallest supply of housing in the history of the United States right now.
And what about this? Tell me how this plays in. You have children, right?
Yeah, I have 3.
Okay, right. So you know all about moving and how you have to give the school that how you have to apply for school early enough to get in, and you have to give them your permanent address. You've dealt with that at least 10 times. And so tell people, for those of you at home, and I've been trying to tell people this, that there's a huge influx of pressure on people that have kids, and that's who buys homes, people that have children, for predominantly people that families are growing, expanding. Those kids need to have a permanent address 2-3 months before school starts. So right now, beginning of summer, May and June are the hottest.
That's exactly right. And you have to have your utilities for
right. That's cycle. What I bingo.
Yeah.
Bingo. You know the drill.
Yeah. They need a utilities bill that's been in place for more than 30 days.
Right. Because you have to show them your permanent address, because you know how people get with zoning and I want my kid to go to this school. And so they take that
driver's license, permanent. Right. Yeah. No, it's not a game.
No. We always had, when we moved, I have 3 kids too. So I know the drill. So whenever it was always, let's get an address, let's get a house. When we moved to Florida, hey, let's find a house. So all of these things are big. My point is, I think we're going to see another big heat up over the next 3-4 months, and we're not going to peak out maybe till October, November.
I think housing is going to be, I think housing until we have like a significant like move up in rates. The craziest thing. I think we're going to have like another housing bubble. I don't think it's a bubble right now. I think it's like, it's actually like a market that's just reacting to like demand or shortage issue. Whereas if we look at the great financial crisis, which was predicated by a housing bubble, that housing bubble was caused by too much leverage and bad loans. Right. People aren't buying houses now with 95% loan and 5% equity. They're buying houses supply with 50% down payments, dude.
Jeff, there's not enough supply. In the last 10 years, they didn't make enough houses.
But that's why you have to be long-term bullish on the home builders, because what people are doing is they're not saying, I'm going to get into a bidding war in prime Miami, or like, they're moving to these new areas like around where, Nocatee and places like that, where they're building these beautiful spectacular homes, custom designed for people. And people are leaving like high cost areas like New Jersey and Westchester and Long Island. And
New England has moved there. I mean, I'm not kidding.
We have 7 new citizens for every one that leaves the state of Florida. And it's not just Florida. It's like the whole Sun Belt. It's like the whole South.
Yeah.
And so that's where all these builders make their money. They're not building in like Manhattan. They're building new homes in the Sun Belt, in the
outskirts. Right. Let me ask you this. Let me ask you this question. And I want to change because I got a lot of stuff to talk to you about. I've been hearing a buzz about your service, your service that's been really doing well. So I want to get into that too. But let me ask you this, because I know a lot of people who follow us want to know what our thoughts are on crypto. And crypto's been moving a lot since our last conversation. And I know that you guys sitting here right now have been telling everybody listening that it would. But talk to me. What's your view from this point on?
I think crypto has a place. I think crypto has a place in this world, that it's not going to just disappear. I don't think it's a zero at this point. I think that you have to be selective, and you have to really size it like everything else, right? Like, what we teach people, you and I, is like very like sober, prudent, conservative sizing, especially with options, because we deal with like this high volatility asset class, which are stock options that move a lot. And we're pretty tame. We're using usually in the money or at the money, not like these like crazy stuff, but still you have to size them appropriately, because you'll have 20% moves, 15% moves in a night. It happens. It's part of the thing. But if you're appropriately sized on your total portfolio, you don't really feel it so bad. But crypto's the same. If you're like all in with all your money in crypto, I think that's just totally insanity. I know a couple of dudes like that. I'm like, how do you go to the biggest crypto moves I've observed all happen on Sundays? Why is that? I've been an international stock trader for 20 years. The Chinese love doing financial stuff on Sundays because they know the West is all asleep, barbecuing, hanging out in the Hamptons. They know they're strategic about this. So they introduce new policies. They raise margin requirements. They crash commodities. They crash cryptocurrencies. They outlaw exchanges, all on Sunday. It's always Sunday. So I'm like, I don't want to ruin my Sunday with taking a 25-30% on my net worth. Like I wake up Sunday morning, have my coffee, open the Wall Street Journal, and then I go on Coinbase and I see 30% of my net worth has evaporated. But that being said, if it's like gold or something, if you can have like 5%, maybe even maximum up to 10% in your liquid assets in it, it's not a stupid thing to do. Right. I just think like avoid the meme ones, the stupid ones, the fun, like the game ones. Look at, DeFi. DeFi is something I've been paying a lot of attention to, which is decentralized finance. The Ethereum network is all about like creating these products in these situations where, you can issue bonds with cryptocurrency that pay interest payments. Right. Bitcoin doesn't do that though. And the meme ones definitely don't do that. So look at the Ethereum network, because there's a big future in fintech using crypto.
I've heard good. Yes. And I've heard very interesting things about Ethereum. A lot of the old crypto guys are now turning a lot more to that segment of it, to that technology, because it's very
institutional. It's institutional size.
That's the word I was looking for. Right. Yeah. Right. Very interesting. And I always tell people, and I think you will agree, treat crypto as a very speculative asset. Treat crypto in your portfolio like it's a penny stock.
That's right.
You should have penny stocks, but 5%, 4%, 3%, not 50%. So treat it with a lot of speculative understanding.
Respect the money, respect the money. The way it comes easy, you can go easy. And it's like, okay, I have a long-term thesis on some of this DeFi network. So I have a couple of these coins, but like very small percentage of my liquid assets. And I'm really looking at it much more from like a 3 to 5 year time horizon, where I could wake up one day and it was an insignificant amount of money and it turned into a significant amount of money. It's money that can go to zero for me, is what I'm trying to say. And I wouldn't lose any sleep over it.
Right. And that's really it, right there in a nutshell. If it all goes to zero, it won't impact your financial life.
But I don't think it will. But
that's how you have to. But that's the smart way. That's the right, prudent way of thinking. That way you could be objective when you're trading it. Because if it will, you won't be objective.
And then you get like these crashes like we had last Sunday, and then I put a couple of more Grant G's in.
Sure, of course. But again, you're not putting all your eggs in one basket.
No.
Of course. So look, I know you have this program that you recently released, and it's called Burn Notice.
Yeah.
And I've been hearing the buzz about it. I'm up to speed of what's going on. Can you tell us a little bit about it? Recent performance? I hear it's been doing really well.
I think like our ROI on the options this year is like 600% or something like that. Stocks are north of 50%, and I trade every day, 4 days a week minimum. I don't always take over the weekend positions, but the basic rub of it is it's like a fading system, and I'm fading big moves at the close of trading every day. So I have a scanner, I have a proprietary system, and it's really based on like I don't want to use their names, but if you look up some of the most successful proprietary trading firms in the United States history, billionaire guys, it's based on like a style of trading that these guys developed in the 90s with the Nasdaq when there was a lot of volatility. And so the idea being that when you win, you don't win every time. You win at a high percent. I think we're at like 65 to 70% on a win rate.
That's great.
But the big metric that matters is that the wins are twice as big as the losses. So you're winning at a higher percentage. And then when you make money, you make like on average double. So these are the kind of metrics we talk about when we're like, oh, I hate to be ARK, I hate that. These are like professional metrics. Like they check all the boxes for professional money management.
So it has a profit factor. So it has a profit factor of about 2 or something like that.
That's right.
Yeah. So that's great. That is great. And the best part is you're not day trading, but you're only holding trades for 24 hours, right?
Less. I'm holding them from the close until like the open. So there was a study that these MIT guys did, like much smarter people than me, that showed that a lot of the alpha that comes out of the market happens overnight.
Yeah.
It happens overnight. And it's intuitive if you think about it, because what happens a lot of times, and banks are great at this, this is a monetization mechanism for banks, is that people pay insurance to get out of their positions overnight. So they give you their inventory to the bank and say, I don't want this risk, right? So that's an opportunity for a bank to be like, okay, give me your stock. And people do the wrong thing. They do, like, we're wired as humans to do like the opposite of what you should do.
That's right. And
you think mathematically and logically are like, okay, this guy is going to be nervous about holding the stock tonight. Most of the move is going to happen over the night and then he'll try, when things are calm in the morning, he'll pay up again for it. So I'll hold it for him. And that VIG, I do it over and over again. And that VIG is a profit center. So I've designed a trading strategy that's very simple for retail traders to take advantage of what banks know intuitively.
Right. No, I love it. And please keep up the good work. I hear very good things. People are very happy. And folks at home, for those of you who want to check out and learn more about Jeff and Burn Notice, please reach out to Jeff. It's Jeff at Joy of the Trade, and he will guide you the right way. It is a very, very, very savvy, very cool system. Low risk, option friendly. Yeah, option friendly, limited risk. No creative, fancy
big caps. I'm doing big caps. I'm doing stocks that are in the S&P 500, stocks that are above $1 billion market cap.
No monkey business. No monkey business. I said no monkey business.
No high volume options.
Are you doing calls and puts?
Calls and puts.
Beautiful.
High value options.
So it has no
day though. One trade a day, only in every night.
And it has no directional bias. And it has no directional bias. You go long and you go short via put. So there's no direction.
Yeah, sometimes the market gets people panic on the upside to own stocks into the close too. So that's an opportunity to deliver the inventory on the other side. I
love it.
It's a good trading. It's how, I tell people this all the time. It's how professional traders that have to feed their families because of the consistency of it.
Exactly. I'm actually working on a system. I'll just kind of give you a little preview. It holds for more than 24 hours, but it buys only and sells only on the open. It only does.
I love that. I love that.
And I'll give you more info as I'm testing it right now on a real account. So I'll see how it does, and then we'll go from there. But
that's in my wheelhouse.
Oh yeah. I
love the swing trades too, because there's obviously like big meat. There's big kills to be had in the swing trading markets. But when you have high volatility, a lot of it has to do with the market. When you have a lot of volatility and you have these rock and roll moves, you can make, like, I think last week, just the stock return was like 15% in a week in 4 trades. That's you can't have that just sitting and, like the activity creates the opportunity.
Right. Well, folks at home, for those of you who want to check out Burn Notice, I highly, highly recommend you do. Jeff at Joy of the Trade is how you reach Jeff. He will answer your questions. He will answer your comments, good or bad. Send him an email. Let him know how you like these videos. If you want to reach out to me, support@marketgeeks.com. Very, very quick way to reach me, and it'll get to me without going through 3 people first. Support@marketgeeks.com, Jeff at joyofthetrade.com. This was a wonderful session. As usual, we covered a lot of ground. Jeff, thank you so much. And again, check out Burn Notice. You guys will love it.
Thanks for the hype. I appreciate it.
No hype. It's doing. If it wasn't doing well, I wouldn't be tired. It's doing great. I want to talk about it, man.
I know.
I mean, I'm proud of you. This is great. This is what I want. This is what Wealth Press is all about.
Yeah, making people money is the best.
Exactly.
And I've had a lot of people that didn't know that this type of style existed, and they're excited every day because there's a new opportunity every day.
Yeah. That's right. And remember, you're only holding trades like 14 hours and you're bypassing the day trading rule.
Oh, it teaches you a lot about trading in general because you become unmarried, you become unemotional and unmarried to positions. We just get out.
Exactly.
Get in and get out.
I love it. Yeah. Jeff, thank you once again. It was a great session, and I will talk to you next Wednesday, and I'm sure we'll talk plenty of times before then.
Thank you, my friend.
Take care and have a wonderful day, and keep up the great work with Burn Notice.
Likewise, my friend. Take it easy.
Bye.